Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Wednesday, October 5th, 2011 is brought to you by Realtic. All right, let's get right into the mix, guys. Markets are headed higher again. Basically, the upside is due to the late day surge yesterday. I'm going to explain exactly what went on a technical basis. This is going to be the insight that you need to understand the markets. And again, if you really want to take it to the next level, you have to take the free trial of the Research Center or the free trial of the chat room, or just do both. Both are 7-day free trials. You can take them together and start rocking it with the elite group that is outperforming institutions and printing money as if we were the Federal Reserves ourselves. All right, let's go into it here, folks. First off, the late day surge. Why was this important yesterday? Why was it kind of concocted by the Federal Reserve and the governments around the world? Because they knew if the market closed below that 110.30 level, there was going to be a crash scenario. The markets would literally drop another 10% in days. So it was imperative they release a certain rumor about another Greek bailout or another bank bailout in Europe to send this market higher. By recapturing this level right here, folks, this one right here, and you have to understand how this level was key. I'm going to go over it in a little bit. But by recapturing this level, you held a technical pivot low. What that does is it nails all the shorts that had accumulated down in this area, and they all have to cover. That buying accelerates the upside, reestablishes the upside pivot, and ultimately creates more buying. Now, you held a technical low based on confirmation, which is a proprietary technique we use here at In the Money Stocks, and by that means you head up for the short term. Now, the markets will come down again. And again, we made money on the down move. We made money yesterday on the up move. And the beauty of it is we're going to make money in any single market using our proprietary technology and technical analysis. All right, in any case, let's go to the daily chart. I want to show you this a little bit more. All right, here's your August 9th pivot low right here. See the bear flag here? See how you break down, you bounce back, retest that white line, and go back down? You basically come down on Monday and close below the 110.30 level. Now, the average person says, oh, this is a breakdown, let me short. We know better. I utilized that and the next drop the next day to cover my last shorts and get myself ready to go long. Why? Because I knew the Federal Reserve. I know Ben Bernanke is not going to let this market collapse, and I know how powerful the breakdown below 110.30 would be. You closed below, amateurs jump on board, I start accumulating longs, and look at the market reversal. Massive reversal there. And again, it's all about the late day surge, and the reason why. If you had closed down here, down here, down here, you would have had a technical confirmation of a breakdown, and I'm telling you right now, markets would have gone to 104.50 or to 100 on the spiders within days. You're talking about a 5 to 10% drop in days. It would have been a collapse. It would have rocked the world. The global economies would have gone into even more of a recession. There was a must save. I mean, if there's one time the PPT was going to work, plunge protection team, it was yesterday to save this market. Up the market goes here, blasting higher. It recaptures this level here, and again, I can erase this line. It's not as important. It's just this bottom line that you want to care about right down here. You recaptured yesterday. Technically, you hold, plus remember all the shorts that accumulated here, the idiotic shorts, the shorts that just don't know anything about knowing the market, that don't know the methodology of in-the-money stocks, that are on the wrong side, unlike the institutions in the money stocks. And I want to repeat this, folks. We're outperforming institutions like Goldman Sachs here. You think they're making money? You come here percentage-wise, we're nailing it 10 times better than they are. All right, people in the chat room in the Research Center have been talking on the social side, Traders Life 24/7, which is geared towards traders alone, and they can discuss levels and discuss technicals and discuss trades. They've been talking and saying essentially that we are bigger in terms of printing money than the Federal Reserve themselves. And again, free trial. Take a free trial. Check it out. People just in yesterday were saying how they made enough money in the chat room in the Research Center just alone in yesterday's to pay for multiple years of the services here. Just in one day of the free trial, we had people saying that. In any case, this market, again, short-term bias is obviously up. I gave that call yesterday based on the recapture of the 110. However, it will be short-lived. If we get up to the 20 moving average on the daily, that's your first resistance line. And then you start to look for a pullback. Even the 50 is now coming down, so that's going to keep a lot of pressure on this market. This market ultimately will head lower, but the key is, can you nail the top? Can you nail the bottom? That's what we've been doing. If you're not doing that, if you're not making money, you should be killing this market. We've been killing this market. If you're not, then you got to be joining the premier team, the elite group here at In the Money Stocks. We've created a trading base here of traders and swing traders that, again, will create the best group in the world, including institutions and hedge funds. Far better traders out there, what we're training. We're training everyone, and that's the beauty. We give out swing trades. I'll give out my swing trades. Anytime I enter a position, I'll give it out. Short, long, whatever. Hot charts and alerts, chat room, it goes up. Research center, chat room, whatever you're in, you're going to get that trade. But the key is, again, it's in any market. Make money on the downside, make money on the upside. Position your 401k to be on the right side of the market constantly. Even if you can't shorten a 401k, so at least you pull out in cash for the downward move when we say it's going to happen. You save yourself a crap load while everyone else is getting creamed. Then you position yourself long. Bam, making more money on the upside. Then in cash, back and forth. All right, in any case, let's talk about the intraday here. The levels continue to be key. We actually got a nice little short here at the 200 this morning. I took, made some good money. This is a day trade now, but again, we're talking swing trades before here. But just looking at some of the intraday action, market again floated up, pulled back, floated up to the 200, pulled back, then finally broke through the 200 and has gone to this next level. Why is this next level important? Where did that come from? Clearly, pivot high right here from the 3rd, which again was Monday. All right, that was Monday's high, and obviously that's going to be resistance. Now, if you break through that, you're probably going to go right up here. This would be your next general area of resistance. Minor there. Minor here would be your next spot. I mean, there's a bunch of little levels on the way up. Again, I'm not looking to short this market yet. In fact, still looking at possible longs as long as we stay above the 110.30 level. That's your pivot. And again, amazing to see how the government comes out here, Federal Reserve, global governments, and so forth. They release these rumors. Don't think it was a coincidence. I mean, we've seen these rumors about these bank bailouts come out probably 4 times in the last couple months or even the last month. It's not a coincidence they come out at 3 o'clock. It's done precisely at a certain time frame to create a run into the close where the market will close above a certain level. It's manipulation, guys. 101. Plain old manipulation. But you know what? Frankly, I couldn't care less. I don't care if the market goes down. I don't care if it goes up. Neither should you. Because as long as you're on the right side of the trade, you're making money. All right. In any case, let's take a look at some stocks out there that are moving today. Research in motion. Big move on more buyout talk. Again, beautiful move up. Notice how on the daily chart, RIMM, Research in Motion, goes right to the 20 moving average, stalls out there. What else is moving today? Let's take a look. JP Morgan, which had an unbelievable run yesterday into the close, is basically consolidating flat today. This was an epic move. The financials really led yesterday's rally because of the bank bailout in Europe talk. And Morgan Stanley was another one. Goldman Sachs had a $10 reversal off the lows. Really ridiculous type moves. Today, those stocks are pausing. What's rallying today? You have Apple, which had a big drop early. Take a look at this Apple drop. I mean, incredible, and then it reversed. Apple drops about $10 here early on, not to yesterday's lows, and then rallied all the way back and is now up $6.60. Probably a good short. You want a short right here to watch for this afternoon? Right here. 200 moving average, pivot double top. Bam, 2 signals pointing towards a little bit of a pullback. This is a scalp play, so just be aware of that. For day traders only, you got to know what you're doing. It's approximately at 381.50, 381.50-ish, give or take a little bit right there. That'll be a little bit of a pullback level. You probably get $1 out of it on the downside or so, something quick like that. But that's a nice little level there. All right, let's take a look at a couple other things out there. What else is going on? Amazon today also having a great day, up $5.57 right now, as that continues to be very, very strong. That actually blasted through the 200 moving average. Now, you might say, well, how come on the Apple chart I was saying 200 might be resistance, and then here it goes right through? I'll tell you right now. On the Apple chart, you had double resistance, 2 signals. Pivot double top and the 200. That combines for an extra strong wall of resistance. That's what you're looking for in an up market. If you're going to short something in an up market, look for 2 signals at least before you short it. Otherwise, you're going to get yourself in trouble. Now, on the Amazon, where's the second signal? There is none. There's no double top. There's no resistance aside from the 200. In a strong market, only short if you have multiple signals. And that goes for swing trading too. If you're a swing trader and you're thinking about this, think about that. If you're looking to short something on the daily chart, make sure you have 2 signals in a strong market and an uptrending market. Downtrending, you only need 1 signal to short because it's downtrending. Same thing on the long side. If you're going to go long on a downtrending market, you got to have 2 signals at least. Learn these signals by taking the free trial of the Research Center. Take the free trial of the chat room. We're rocking it every single day, folks. We're here for you. Honestly, I'll teach you all my methods. You'll become just like me. You'll be making money just like me. Just may take a little time. Took me time to learn it, but I'm willing to teach you a lot faster than it took me to learn all this stuff. Alrighty, enough said. I'm going to go back to making money this afternoon in the Research Center in the chat room. Come join us here at InTheMoneyStocks.com. Take care.